It was like, it started as a cough, and last week it got really bad, and now it's getting better, but it's still a cough.
I'm not tired.
Yeah. It makes me say things like agenda when I need to.
Oh, turn my phone.
That was,
People get the calling around.
You're gonna call whenever you're in a
I
meeting.
know it. That's what I say. Let me turn it on because I be getting phone calls in the morning time. I do. My daughter usually check in before. Oh my God! Before she goes to work, on the way into her office.
And she does that a lot of days.
She does that every year. So she checks in with me just to see the matter of fact, just the latest gossip between the families showing her. She wanna keep in tune, okay? But yeah, she calls me and we'll talk. And then when we get in a really heated conversation of what's going on, okay, mommy, I've made it into my office. I have a 9 o'clock. I said, okay, we'll talk later. We'll pick up where we
We'll
left
pick
off.
up right. Continue
Okay.
right on your
I said, we
the
pick
day
up.
you're alive.
Yeah.
The soap opera.
Right. I said, we'll pick up, and then we'll pick up, and then I have to think about, say, okay, what did we say? I said, what did we leave out yesterday?
You need a recap.
Yeah, right, a recap. And she said, oh, Mom, I said, oh, okay. And then we'll talk for about 10 or 15 more minutes, and here we go again. Okay, Mommy, I made it in the office. I said, okay, I'll talk to you later. I said, okay.
how you doing?
Okay,
You saw him again?
Aaron's, oh, that's the older one, I'm sorry. I just saw that.
He's looking to see if we've contracted with them before.
Yeah, I don't think we have.
Well, we've done something apparently, because we paid them
With the WCA, I believe.
Oh,
Yeah.
it's WCA. Ah, did you share that in that string? I haven't looked. Because they're doing all this research, trying to figure out.
I think I verbally said that
Okay.
to Aaron. We had a conversation, but I don't think I wrote that anywhere in the email.
It's because of the work that you're doing in exactly the same locations.
Okay.
Mobilization
Oh, sure, yeah.
and all these other costs would be significantly lower. So the reason why we would want to go sole source, is it's in the interest of contracting, and the contracting process will take.
Is it sole source or direct award?
It would be a direct award because somebody else that could do the work, but nobody else could do the work as effectively as this from a cost perspective and also a knowledge and understanding as each of these appurtenances in each of these locations. It would be quite a laborious process to go through and bid out and put together the RFP.
One of the things we should do
Exactly. Services here, you just contract directly with them.
How do we get it on your contract?
How to get the original contract.
I'll talk to you.
They wanna
something
make
wrong
sure
with
people that the world be aware
Contract itself, that issue that I talked to
We need to make sure
made a
how.
lot of sense, a lot of things we can see,
Right, but when you personally are like, oh, what is this? What are they doing?
yeah, really get into the deepness of it, it is awakening. So, they just want to, like they say, they're not done. Oh, let me see.
Unless she's on.
What phone did you call?
I called her this West County wastewater
Oh, I got
cell. You have another, yeah.
Oh, I have
I know she
cell.
has a couple phones.
I know she knows, because you corresponded.
Yeah, she don't want to.
The draft agenda.
I did, she knows, yeah.
I was just saying, I wonder if they had started again blocking up the streets.
Oh,
and
she's
stuff.
got on time.
Yeah. They say they're gonna do it, they hitting wherever businesses are at. They want people to lose money. Yeah. Yeah,
That's what they do in other countries. We're gonna make you.
They're gonna make you hurt in the pocket. That's why they hit Tesla. They hit Tesla then because they know it's a money maker. And then they know that people, the bridge, the Golden Gate Bridge is a money maker. People come from Marin, people come from San Francisco.
People with money are using it, so they're gonna make a.
And you know, you greater, that bridge is $9 a walk.
It's getting expensive.
Yeah, and they get ready to work
Well,
again.
it's more of an argument.
Yeah, yeah, so they said we wanna hit it where it's at, so people would take, and people was like, because they have to go to work, they have to go to work. Yeah, people are dying too, but we gotta go to work. Yeah, so you know, you look at both, yeah.
Boys are gonna argue for either more money or let us stay home.
You're right, and then they say,
I'll go
well,
back.
More ammunition.
right, and then they say, well, the tax dollars, look at our tax dollars. If we don't go to work and make our tax dollars, they won't be able to fund the war. So, let's fund the war. Yeah. So it's all intertwined. No, if you go deep and if you start unpeeling these layers, you see how deep it is. It's not just surface. It's just not two countries.
Oh, everything.
People are benefiting off of this.
Right, yeah.
They're suffering.
Yeah, it's suffering. People are dying. You know.
We need an
And then we
economic
taking out money. I
epidemiologist
consider taking out taxpayers' money and financing. Oh, it's heavy. It was so heavy, I was drained yesterday. Drained from reading all these 90 pages.
Yep.
Good morning.
Just put it right here on the hook. I'll put it on the hook.
On the hook. Okay. What about that one?
I got it.
Did they do something?
I got the hook.
I tested it like 2 or 3
Now,
times.
if you need,
I just need my computer.
Probably do it again. Tomorrow.
I just wanna test.
It worked. And I tested I tested for Leah the other day just to make sure like
Apologize, I am late.
Chad,
it was working.
look, it wasn't no 4 hours.
It could have been. I was going to work.
Like I say, 4 hours.
You got it. Is it on? Yeah. Yeah, it's on. All right, let's go. Look at this one. Oh, he didn't change anything. All right, let's go. You ready? Yeah. All right.
Recording in progress.
It's 9:08. Calling the meeting to order. Madam Clerk, please call the roll.
I'm sorry.
Call to order.
Oh, I'm sorry. I'm still doing tech over here. Director Kemerit. Present. And Chair Sede.
Yes, present.
Thank you.
Madam Clerk, could you please read the public comments?
Sure.
Yes, ma'am.
Members of the public may comment during this time up to 3 minutes per speaker. Directors may ask brief clarifying questions, but they not engage in discussion regarding public comment made during this time. Now is the time for public comment for items not on the agenda. We have not received any written requests to speak, but if anyone wishes to speak now for non-agenda items, please approach the podium or raise your hand in Zoom. Seeing none, we have no public comments.
Thank you very much. Director of Administrative Services, Justin Lowe, please lead us through the remainder of the agenda.
Okay, item 1 on the agenda is to accept the minutes of the March 14th, 2024 Finance and Administration Committee meeting. Madam Clerk, have we received written comments on this item or requests to speak?
We have not. If anyone wishes to speak on item 1, please approach the podium or raise your hand in Zoom. Seeing none, we have no public comments.
Okay, I'd like to move to accept the Finance Administration Committee, March 14th, 2024 minutes.
I have no objection. So it is in the record. Next item.
Okay. Item 2 on the agenda is to receive a report on the fiscal year 2023 annual comprehensive financial report for the year ending June 30th, 2023. Madam Clerk, have we received written comments on this item or requests to speak?
We have not. If anyone wishes to speak on item 2, please approach the podium or raise your hand in Zoom. Seeing none, we have no public comments.
All right. So on this this item, we wanted to share with the first with the Finance Committee our annual comprehensive financial report. This is our audit. We're a few months late than what we would like this year. We were working with a new auditor and getting staff and procedures up and running. But we're able to meet our deadlines and get the audit in to those who are requiring copies of it. But I do want to present this to the Finance and Administration Committee meeting. When we do, we'll have a similar presentation to the board in a couple weeks, and that will be actually presented by our auditor with Mays and Associates. So this is our first year. We've transitioned to a new auditing firm this year, and this is their first audit that they're completing with us. So we can just go ahead and start. Do you have get the PowerPoint up? I'm just run through kind of brief highlights. I wanted to talk just a little bit about, in the agenda packet, we had the full comprehensive financial report. It's, if you don't look at these types of reports regularly, it's, trying to understand what the numbers mean. It takes a little bit of time to get it, but I'll start. I just want to go through and let's see if this one works. I'm the only one where the clicker works for me. So let's just start off on the audit. So Mays and Associates, they're an independent auditor. They reviewed all of our financial transactions. So just, what an auditor does is they take samples of, they verify all our policies and procedures, and they take samples, transactions of, invoices and make sure we have all the right backup and the documentation. So they can't do every single thing, but as an auditor, they're just verifying that we are following kind of the best practices, accounting, any procedures, any rules, that we're making the proper, we have the proper documentation and backup whenever we do financial transactions. So the Mays and Associates, so their audit came out as a clean audit, so there were no findings or kind of recommendations for changes for how we manage our finances. And so there's 3 main pieces of financial data that are in this report. In this report, there are many pages of notes that have additional details about certain types of, whether it's what we're investing in capital assets, what's going on with our pensions, our OPEB. But there's 3 main statements. So statement of net position, statement of revenues, expenses, and changes in net position, and statement of cash flow that are the main kind of financial drivers that we're looking at. So I'm just going to go over, starting off with the statement of net position, kind of talk about, this is the high level of, where it's at. See, now it's not where, there we go. So the way that we read it, so we have current assets, which are, the cash that we have in the bank, money that we're investing in our capital program. We have non-current assets. So those are, our land. It could be facilities that we've already built, like this building, our treatment plant, our pipes. And then we have deferred outflow of resources. This is really, it's an accounting transaction. So I don't want to get into too much detail of what it is. It's accounting transactions related to pension and to our OPEB, which is the other post-employment benefits. And so you can see this column here between 22 and 23. So we had about 36.2 million in current assets, 225.5 million in non-current assets, and we had 8.8 million in deferred outflow of resources in fiscal year 23. Then liabilities, those are the bills that we owe other people. So current liabilities are, whether we have contracts with certain vendors or we have, just that related to payroll expenses that we may owe employees. Non-current liabilities, most of that is related to our debt. So how much money do we owe? It's like our bonds, our SRF loans, that's non-current liabilities. The current liabilities, it's the current portion that's due, within a year. But non-current, it's a 30-year term. That's the total amount that we owe over the next 25 years or 20 years. And then deferred inflow of resources, it's the kind of the liability side of our pension and OPEB. So you take your current assets, you add all those up, and you subtract your current liabilities, and you get your net position. And so you take your prior year net position and you add them up. And so our net position adds up 110.2 million. So this number is a positive number, so it's a good sign. So it's just generally is saying that we have resources available. This is based on when we take all our assets and our liabilities, it's a positive number. So if this number was negative, we would be in serious financial problems right now, right? But so this is, in our net position on paper, it's, I'll explain to it in a little bit. In 2022, it looks like it decreased. We had to do a restatement of we had to do a prior year adjustment because once the prior fiscal year, it's set in stone. You don't change prior year adjustments. So the auditor did find an entry that was essentially double counted revenue related to the bonds last year, and so we had to make an adjustment to our net position. So the next one, let's see if this is, there you go. Is just looking at our revenues and expenses. So we have operating revenues, operating expenses, and then there's the depreciation. So depreciation is an accounting entry, so we're not paying anybody for depreciation. It's just to recognize that our assets lose value over time, and so there's an accounting entry, and we're essentially using our resources to pay for that depreciation. And then we have non-operating revenues, right? For the accounting purposes, that's things like our property taxes falls under non-operating revenues. And so then in operating revenues, the bulk of our operating revenues are our sewer service charges. And then operating expense, right? The operating expenses, what we use to pay day to day. And then we have our net income before capital contributions. So we ended at a mere $3 million. We had capital contributions, which are now our capacity charges. That's money that goes into the capital program. And then any changes in the net position. So on this slide, you can see that I put at the bottom of fiscal year 22, it's what we restated the fiscal year 22. But that in the audit, it shows that there was an $8 million adjustment, and then we restated the net position from prior year, and then we came up with a calculation of we ended the year with 110.2 million. So just so you know, like for kind of the budget purposes, like accounting, whenever we would show like an actual expenses, we don't show like depreciation in the actual expenses, but we need to show it as an accounting entry. And then all of our capital project expenses don't show up in here. Those are what shows up in our assets in the prior slide. So we make accounting every year that we spend to the capital is not recognized as an expense in here. We put it in what's called a fund that we set aside that's called construction in progress. And then once the capital project is completed, we take the total dollar value of that capital project and then we put it in we have a tracking mechanism called fixed assets. And then that becomes part of the depreciable assets. So the capital projects are all in the prior slide that talks about assets. So if you want to, this is really focusing on kind of our operating revenues and expenses. Let's see if that one, there we go. That worked, this one. Okay, and the last piece I just wanted to share with you is where we are with our pension and our OPEB liabilities. So again, our pension, we have employees that are with our pension with CalPERS, and so the employees are either classic members or they're PEPRA, which is if they were hired after 2013, they're a PEPRA member. We've combined actually both of these together. And because we're an employer of less than 100 employees, we are part of a pooled pension program with CalPERS. And so they combine all public agencies in California that are under 100 employees. And so our proportionate share of our liability for pensions is $68.2 million. The fiduciary net position, so we have actuarials that do a lot of the calculations. They look at the assumptions of, increased cost of living, increased medical expenses, life expectancy, and they put all these calculations together to come up with what our liability is. And then on the financial side is all this money is being invested, and so CalPERS is investing this as part of the pension program, and this is our net position is $50.1 million, and that means we have a liability of $18 million. And so our funded status for pension is 76.7%. I'm not showing it on this slide, but every year is about a year in reverse, a year lag before we get this updated. A year ago, our net liability was $8 million. And so this is based on the market. Like CalPERS in 2021 had a really good year. In 2022, CalPERS lost some money, so our liability increased significantly. So it just kind of fluctuates based on the return on the market. And then on the OPEB side, this is completely self-funded. It's through the CalPERS Medical is the benefits offered, but it's for those who retire from West County Wastewater. They're entitled to retiree medical benefits. The actuarials came up that our liability is $12.7 million. Our net position, this is money that we have in a 115 trust, is $14.2 million, which means we have our liability, which is when it's in parentheses, it's actually an asset. So we have more money in our account than what our liability is at this point. At the end of the fiscal year, so that means we're 112% funded. So what we're working on doing is balancing how much money we're going to use from our 115 trust account to pay for retiree medical expenses and how much are we going to use as pay as we go, so we can keep that kind of balance that out. But it's, some years the market does pretty well, and some years it does pretty bad. So we, a couple years from now, all of a sudden our funded status and our OPEB could be below 100%. But we've been above 100% for the last couple years now, and we're starting to draw down on our 115 trust, and because that money is being invested and making is earning, but it could also make losses depending on how the market is performing. So I think that's the end of this one here. Yep, that is the end of our the presentation. I was happy to answer any questions about our kind of financial status. Just as a closing, we're in a good position right now. But there's as we're looking at future expenses, we're looking at projects that we have to spend, pay for, other expenses that are coming up, just things to be aware of. But generally, overall, we're in a pretty healthy financial position at this point. So happy to answer any questions.
Okay, thank you. That was a very great explanation. I had gone through all the 98 pages, and I took various notes, but at the end, it saw that it was a very healthy audit at this point. I did have a question. I was looking at it, and I can't find it here. I should have put down the page number. But as we looked at the the OPEC, I was looking at the different ages for retirement and their benefits. I think it was something like if you retire in your late 50s, maybe 50s and 60s, and it looked like it depreciated it was good at the first beginning, and then a few years when you hit that mark, it depreciated and it was spread it out to diversify. I wasn't too clear on how that jumbled backwards and forth at that part.
I'd have to go back and look at like all the kind of the actuarial studies. So we do have an outside firm that kind of takes all of this information together to figure out what our liability is. But generally, it's if somebody retires, right, with West County Wastewater, they can retire at 60 years old, and if they have 20 years of CalPERS service, they can receive 100%. 5 years with us and at least 20 years of service, they can get 100% of the medical retire benefit. But what you're probably seeing is those first couple years, because they're not eligible for Medicare yet, we're paying that full cost. But as soon as the person who's receiving the benefits becomes eligible for Medicare, then we're not, it's the federal government Medicare program that's also covering some of those costs. And so then our costs are going, that we're paying, we're not paying the full benefit if they're also using Medicare as part of that. That's probably what without seeing the exact numbers, that is probably the way I think that we would be able to explain some of those differences as they get older. Yeah.
Okay, all right.
Maria's giving me the thumbs up, so I said it
thank you.
correctly.
Okay, thank you. So that was the only thing that I kind of, I wasn't too clear on. I could follow too much with it, looking at audits and stuff. I was like a little, I'm not too much understanding. But I thought it was a great, it was a great audit. Thank you.
Good morning, thank you. It's a lot of information. So, a couple of recommendations, of course. Consistent with some of the other recommendations that I've given when we give some of these reports to the board. And just in an effort to make sure that we can get through this very weighty report without having to give a course in financial reporting. Can we start off with having just a footer with some of the acronyms in the footer? Because I can see that there's going to be a question. I can hear the question now. Could you remind me again what OPEB is? Could you remind me again the difference between, even though you explained it, it's going to come up again, current and non-current, the difference between, okay, so you said clean audit was a dirty audit. So things like that, so can you let's just avoid it and just any acronyms that you use, if we can just the common ones, right? Just put it in the footer. PEPRA, OPEB, like that. I think that for the public who may pull this down at any point, it is always good to have just at the front of the report, just a reminder that I know we said fiscal year 23, but what that means. So that it means July 1 through June 30. I know we know what it means, but I think inherently, different people have different ones. Sometimes it's calendar year, sometimes it's September, the federal fiscal year. So just a reminder that our fiscal year is June to July. Or July to June, sorry. Yeah, July to June. And July to June. And also, you started off saying it, but I don't think you finished your statement. You said that we revised our auditor, and I would just like for you to just give a statement at the very beginning of why, because it's a state of California requirement that we periodically change the auditor, not just the auditor with the firm, but the auditing firm and why that is, because, there's an inherent conflict of interest, or there could be a familiarity with the district that could not serve to give us the state or the ratepayers comfort in knowing that it is a true audit, something like that. Ms. Nicole knows, the general counsel knows. She can give you the words for that, but it's good for not only the board, but the public to know why we change auditors, and that is not arbitrary, but it's also required, and it's also, I think it's good comfort for people to know that we do this and they can trust the result of the audit is, when we go back to talking about transparency, I think that that's just a good thing to say. There was something else. Again, when you talk about transparent or depreciation, assets, expense, seems like a very easy concept, but I can see you're going to get yourself into somebody going down a rabbit hole if you just don't define it ahead of time. It might just be easy just to attach something on the back of the report if you don't want to put it in the footer. I know people should know it, but just save ourselves a little bit of problems. And I think the last one is we entered into different savings plans the last year, all right? So that may just be good to say that reminder. Class and like that.
Yeah, it is in the report, one of the notes, right? As there are many pages of notes, but it just says very briefly that what they are, but it is listed in there.
Yeah,
Actually, yes.
I wouldn't even just go into too much, just maybe just mention it, right? When you talked about, because you mentioned, you said something about when you were talking current, non-current bonds and where we have our investments, and just say, as a reminder, board, we did move some of our assets around, as such as class, like that.
Right.
And the explanations there, they can read it on their own.
And if we get into the details, we can show that we had a greater interest earnings in fiscal year 23 than we did in
That's what I mean.
2022.
Yes.
Right, yeah.
So we can refer back to that, and if they want greater detail, refer them back to the actual report, and they can look it up on their own.
Okay.
But I think just bringing it up right there is likely the best way to do that. And I think, that was it. The net position, thank you for defining that. Because you were talking and I wrote it down and I was like, I hope he defines it. And you went ahead and defined it because I'm trying to think about the questions that are going to be asked. So that was good. And that was it for me. Oh, so the 76.7 on the pension, I can imagine that because we are over on the OPED, there's going to be a question about making up the difference, because I think this came up before in a previous conversation about making up the difference between the deficits, because it's not fully funded. So I just, you don't have to tell us here, but I would just anticipate having a question about why isn't that one fully funded? I mean, you answered it here, but there could be,
Sure.
at least two who are going to ask you about that one.
I mean, it is, for the record, it is a more, it's a little more complicated that we could spend a lot more time into what our options are.
I would like
But-
not to.
But it is there, and we have more control over our OPEB right now, and
Yes.
then CalPERS is managing the
I
investments.
would like that to be the answer. I mean, I understand pension and pension liability, but I know not all of my colleagues do, so I would like it to have a very succinct answer that pensions are a lot more volatile and not within our control, right? And so I think that the answer you just gave, we have a lot more control over OPEB than we do over pensions. And if you can really focus on what you said about, because we're under 100 employees, we're in a pool, and this is our proportionate share. I think that will help make it make sense that we're not, other employers have more of a direct cost rather than a pooled liability. That should be more helpful. Director King Meredith, what do you think? I mean, the explanation on that one, because I can see that one might start
Oh, absolutely.
going down a rabbit hole.
That's why I asked about,
Yeah.
I could see.
Yeah, I think just being ready to have just a quick answer, either you or Miss Maria, just a really short, succinct answer, so we don't go into a long discussion of it, because that one, most people don't understand pension and OPEB, so it doesn't matter what you say, it's not gonna change. But that was it. Thank you. And we already asked for public comment, so I think we can move.
Right, yeah, I don't, we will present, I don't know if we get the board to approve, we are going to plan to present this to the full board on the May 1st.
On the
Board, May 1st.
May 1st meeting?
Board meeting, yeah.
Thank you.
All right, so the next item is item 3 on the agenda, is to discuss board travel expense reporting and related practices. Madam Clerk, have we received written comments on this item or requests to speak?
We have not. If anyone wishes to speak on this item, please approach the podium or raise your hand in Zoom. Seeing none, we have no public comments.
Okay, so we don't have any kind of documents for you. We want to start a discussion. So we've been looking at kind of the reporting requirements and like what we do with staff. And we have a discrepancy on the way we ask the board to report travel, recognizing that sometimes Robin pays for quite a few different expenses on her credit card, whether for hotel, and then with, the directors may be paying for certain things. So what we're looking to do is get the board of directors, whenever there's travel, to have a form similar that we have employees. So employees, they have a reconciliation form after they travel. So we show how much of the travel-related expenses were paid through district credit card, and then how much the employee is asking for reimbursement. So there's a space, and then they provide all the documentation and receipts. And so right now it's kind of it's varied, as in, if Robin pays for some of those expenses through her credit card, we have the receipts, or if the directors pay or just getting reimbursed specifically for the meal expenses or other incidentals, or if you as a director paid through your credit card. So we're just looking at different options. So internally we can have a just better reconciliation similar to what we already have with staff. I think that's kind of the first part that we're looking at. I don't know, Robin, if I covered kind of just on the reporting side, if there's anything else you'd like to add on there.
No, that's it.
Okay, Director King Meredith, before I say anything.
Oh, just that it helps staff. Right now, they're looking at different parts and different pieces at different times, and the coding may not be exactly right or in the right place. And so when we go look at reports, we may not be really drawing accurate information. So not that it's inaccurate, it's just not succinctly in a report that we would be looking at for a certain item.
Go ahead.
I have, that's good to know, to have a form directed to be utilized for the board themselves. Is it possible, if we go this way, to accept this, to do this, a timeline, when we have to actually put in for travel or a conference or, to travel away, is it possible to have those forms ready to give to a board member, to have that, to pre-do that information so you could have it at a timely fashion, instead of using your credit card at this point, and to be able to move forward and to have that in place. Do you understand what I'm saying? At this point, have the form before, have a form ready for us to pre-fill out at this time. For example, for myself, if I do any traveling, I would like to know to call you or to call the administrator and say, well, I'll need a form because I am anticipating to go to this conference at this point, and that I will be utilizing my credit card, this, that, and the other. So you'll be able to log that in and have it, the same as you would do. We call you, you go ahead and you take care of that. Is there any way that we could have that form before the time, to have it filled out so we can submit it to you?
I'm not sure about the having a form available to you is not a problem. We should
Okay.
be able to accomplish that. Now, filling it out, I'm not sure, like, if I'm involved in part of the process, let's just, because of purchase, I can definitely start the form and input information that I'm doing, right? So I can start it, but yeah, beyond that, I think, but just having a form available for you to fill out when you need it, yeah, that should not be an issue.
And give it, and have it ready to you at a given time, say, a week ahead or 3 days or whatever, a time frame. So you'll be able to, to do what you need to do in order for it to work. I know you do a lot of pre-setup, for conferences and so forth, and booking for the rooms and all that. But when it comes to our expense for our credit card, to have that information, knowing that we have that slip or that form, have it ready to have it filled out and submitted to you within a good amount of time before or after. Are you okay with it?
What you mean, I think that's a determination that would have to be made by an analysis of what would work for, on an administrative level, and then the board would probably
Okay.
make a final recommendation as to
Okay.
what time a reconciliation report should be completed.
Okay, I just, so I see where we're going, I'm okay with it, okay? All right, thank you.
I'm the biggest culprit on this one, so I come from a whole different perspective. I'm like, I have no shame, you know what I mean? 'Cause I hate expense reports. I hate it. And sadly, it's my own money. So it's not even about your money, it's mine. But my biggest hang up is the form is horrible. So yeah, you're raising your hand. You guys take responsibility for that.
If you want to
The
speak up
form,
here.
come here. The form is horrible. The form is not functional. It does not work for us. It's just, so we should start there. We should start with the form. We shouldn't start with we're jumping like to procedure, but the form is just not functional. It's not functional for us.
Sure. Well, wait, and I'll let Maria. Maria's been doing a lot of work for the employee side on improving how we fill out forms. So I'll let her
So
talk a little
we
bit to that.
actually got a lot of that feedback. You're not the only one. So
I see doves, I hear bills.
we are actually right now in testing mode. We're seeing if we can break it internally. So finance, you have Ebony right there.
Thank you.
Myself, we're trying to break the form. So we've essentially built a automated type of a form where you can fill it out online and you can upload all your receipts. So it's not like you have to scan everything and
you.
try to attach and do a lot more effort. The idea was to simplify the form and make it easier for the end users to essentially input all their documentation and have it kind of embed, if you put your mileage in, embed the calculation for you. So you didn't even have to do like any calculations. So that was on our list. Hopefully we will roll it out in like another 30 days. We're in the process of testing it right now to make sure it's functioning 100%.
Okay, so it's not like I'm ignoring you. It's a pain. Because like, I will tell you an example. When I take in DC, if you take a taxi, they will text you. the receipt. So now I have to get a text. I have to email the text to myself. Then I got to remember to email the text to you or try. And then I get a message, oh, can you upload this to the drive? What? This is too much work. And I might take 20 taxis going back and forth. So now I got to take the 20 texts to email to the, it's a lot of work. So in my head, I'm like, it's $20. it's $20, but those $20 do add up to me, right?
So the form would be available. We've been testing on the mobile device as well, where you can actually do it on your mobile device.
That would be more helpful.
So at least if you screenshot it, you can say, hey, upload this file if you can find it.
That would be more helpful. But the way that it is now, so this is why I'm talking about Director King Meredith, is like, before we jump to process, we need to jump to what is more realistic in working to make sure we can get there, right?
Right. No, we've
And-
looked at streamlining.
Yes, almost everything is electronic. If you check a bag, they're not printing your receipts anymore. They are putting it in your app. You rarely get a printed, yeah, you have to ask for it, but you can't even ask for it if you check it online. You're not getting it. You have to actually go when you get to the airport and stand in line, and I don't do that. I don't stand in line anymore. You check your bag and it's in your app. So now you gotta wait, and it's not like automatic. You gotta wait, and you gotta. So there's a lot. Almost everything is electronic. So that would be. I think that's my number one like. Right.
We heard you.
So I just want to make sure Robin knows that I'm not ignoring her.
No, our reason for coming to the committee is to say,
Yeah.
to see if you're okay with saying, this is what we're gonna do. We're actually gonna have a reconciliation report versus it being, so we wanted to come to you with that. We recognize that if we make this decision, that this is how things should be, we should have a reconciliation report for a trip, that the form must be addressed.
Tell me what the reconciliation report is. That's different than what I'm.
So when you go.
Is that per person, or you're talking about a big one?
So it's a per trip. So the reconciliation form is what the actual cost is per trip.
Okay, so that's per person.
Right, per person,
Okay,
per trip.
that makes sense.
So if you travel 5 times, then you're gonna do 5 forms.
No, that's fine. I think that's fine. Okay, now, I think that's fine. I have a different question for General Counsel, but I think that's fine. I think that's, so you have a reconciliation report, you have the reconciliation report. Now, what that looks like is what I'm more interested in, right? What that looks like, the ease of use, how we can upload to it, I think is what I'm interested in. I'm interested in what that looks like and how we can get the information in there, because often we have to, we're spending either our own or we're using the card, right? And then what that looks like on the back side, yeah, that is what I'm more interested in, right? And then the process, will come after that. I think the first step is looking at the report itself, and then the process for how we do it comes after that. Right, Justin? Yeah. Right?
Yes, yeah, that's
Okay.
kind of what we're talking more broadly before we go in and say, hey, this is what we want you to.
Yeah, and then I think we figure out the process after, and we can come back here after we see the report. What you have in mind for the report, and then we can roll out the process. And Ms. Nicole, I think that my question is that often, because it's supposed to be tied to our reporting in the meetings, and that doesn't always happen, so I wanted to make sure that that's built into the process, right? Because it hasn't been.
So I think that's a good point. It's built into our reimbursement policy. It states the directors will make a report at the next meeting. And maybe that's something that we can incorporate into the form as well, so that there's sort of that reminder there in more than one place that folks need to be reporting these, the events that they're attending where they're seeking reimbursement from the agency.
Yeah, just a reminder. Okay, thank you. Thank you, Ms. Maria. Thank you, Justin. So, yeah, I just wanted to make sure I mentioned that. Okay, thank you. See, that wasn't so painful. I had a Band-Aid in my bag just in case. Thank you. Thank you, Ms. Robin.
Great. So just a couple other items kind of related to this is as we've been reviewing kind of procedures and policies, the other one that we noticed that will change, we'll send a memo to the whole board, is that every board member is for been several years, they've received $32 a year for mileage reimbursement. But what we really need to change that, instead of just getting a dollar amount, is whenever you submit mileage reimbursement separately, and that could be on a monthly basis. So for whatever meetings you're going to on the district business, you could submit for mileage reimbursement. So right now it's just a $32
Flat rate.
that is on the on your monthly pay as a director. And so that's something we've noticed. I don't remember how far back. It's been going on for probably as long as any director said that you've probably been on the board.
Yeah.
You've probably been seeing that. And so we've just looking at practices where, kind of we need a reimbursement more than just hey, this is how much you're gonna get.
So do we submit that with our, which is fine, I think it's fine. Would we be submitting that with our form that we do when Robin sends out the notice, or how would we submit that?
Yeah, I mean, that could be done, as part of the days of, days of service of reporting, is like, well, here's my mileage reimbursement for the month as well, or here's my mileage.
Is it a different form?
We can look into what are different options that we have.
Because it would be at the IRS rate?
It would be at the IRS rate,
yeah.
right? Currently,
The
it's
GSA rate.
Yeah,
GSA rate.
Yeah, 67 cents a mile.
67 and a
for this
half,
year.
right? 67.5, yeah. Okay. And I think that's important to bring forth. I think that's good. I think it's good, especially for me. I travel a lot.
So yeah, we'll look
Travel
into
lots.
like as process and reporting, right? What's the best, the easiest way that we can get the information, the easiest way for you as a director to fill out the forms.
I think that's actually, I think that's really good. And I think bringing it to people with that direction is good.
Yeah.
Director King Meredith, anything on that one?
No, I'm fine. I'm just being enlightened at this point. That's great. Thank you.
Yeah, and again, I think that one needs to be tied back, General Counsel, that one needs to be tied back to the reporting at the meeting, right? So if you're going to be seeking mileage reimbursement, it needs to be tied back to the report at the meeting,
Right.
right?
And then we have
So
one more.
So if you're going to report it, if you're going to report it in the report that you're saying to Robin, it has to be tied to one of, maybe not the 6 meetings, right? Because there's other meetings that we go to besides the 6 that you claim, but it has to be tied back to some other kind of district business, right? Yeah. And that's why we report them in the meetings. Yes, sir.
Yes, and so the one last item is regarding credit cards. So a couple years ago, we had an independent auditor, CPA, come and just review of our financial procedures and policies. And one of the items that we've been working internally with staff is reducing the number of credit cards that we need to have, because it is a liability for the district if we have a lot of credit cards out there. Just as everybody knows, you have your personal credit cards. Fraud is very real, and it happens where somebody somehow gets your credit card number and creates a fraudulent charge. And so what we're, on the staff side, what we've been looking to do is how can we reduce the number of credit cards and get more of the staff level expenses through accounts and invoicing instead of using a credit card. And so now we're looking at it from the recommendation of, are there opportunities to reduce credit card usage? And so we started just asking, because all the board of directors are issued a credit card, and we started surveying additional other sanitary districts. And so far, West County Wastewater is the only board members that have district-issued credit cards. Everybody else is through their reimbursement, right? So they would, what we could do for like travel, and I think what some of the other boards do is that, the clerk or some other designated staff person may prepay, may arrange for flights, may arrange for hotel, may pay the registration. So there's not a, so the out-of-pocket expenses for the director are really the meals, some travel, taxi, and those kind of things while they're traveling, and they get reimbursed for it. So that's kind of as one of the options is just looking at it. Is there a way, and how does the board or right now the finance committee about removing credit cards from the directors, and then just doing everything, all the expenses would be through reimbursement, and then working with Robin or other staff if you wanted to prepay certain expenses, and we could use it through the other district credit cards for registration, for travel, and those kind of things. So I want to get your thoughts on that one.
Dr. King Meredith?
Well, I hate to say it, but this is what I'm used to of doing the reimbursement, having the individual as myself through other organizations to just do the reimbursement. But as far as the setting up for, travel, the flights and the hotel, that came through our administration piece. So I'm accustomed to, looking at that practice of just being reimbursed for the use of, if you need to use a cab or you need to use an Uber or whatever, to be and pay for that. You pay for that and just be reimbursed for that. So I'm used to that type of practice there.
I know. I'm torn because I'm the one who travels the most. I'm the one who travels the most, and I'm the one who doesn't always get reimbursed quickly. And I still have, like 2 years ago, I sent in like 3-4 times my own money that hasn't been reimbursed. So I'm a little jaded on the reimbursement. Especially, thank you, Maria's been here a while, but we went through quite a few finance managers where I didn't get reimbursed. So I'm a little jaded because it's my own money. So I might not be the right person to ask about, putting out their own money. And because I am the one who travels quite substantially, more than all 4 of the other directors combined. In principle, I think it's good. I get a lot of miles. I don't know how many more miles I need. So in principle, I think it's good. And I think that maybe there's some kind of way we can figure it out. It's hard for me because I have different needs when it comes to travel, and it's hard sometimes to communicate that with Robin, having her book it for me instead of me booking it myself. So especially with flight and hotel. So I think sometimes that part is hard. It becomes a puzzle piece rather than go ahead and booking it directly. So that part is difficult. So I think that part is that part is kind of, I don't know. I'm up. I'm a little. I don't know yet, but I like it in principle. I think it's a good in principle. It's one of those things like I like it for everybody else. So I don't know. Maybe maybe that is what my answer is. I think that's it. I don't like to be like that. I'm the exception, but I just think that that is the way that it is. Yeah. Go ahead, Ms. Robin. You had something to say?
In my experience, so when we talk about the travel reconciliation, one thing that was allowed was that if the director paid for something in its month, and they could still submit that reconciliation. It's not the last time accounting sees it, But any reimbursements that are happening, and they could do that even though the trip has not happened yet, because that money has been paid and receipts have been submitted. So, you know, we have to talk about this procedurally, but it could just be that as simple as you sending me your flight receipts information, and I, you know, continue with filling out that form and getting it submitted that way. But it's not waiting till the end and possibly losing track of what's happening with reimbursements.
Understood. You understand what she's saying?
I understand.
Yeah.
Internal. Yes, I understand. And as you were speaking, as I had mentioned about taking an Uber, you know, and being reimbursed, one of the things that a lot of the conferences has parking, and that could be, you know, iffy, okay? You know, if you're gonna use the parking, would that be part of the package, or would we be paying up front and then being reimbursed? I was just thinking about that because of the